My interest in Palantir has been spiked. I did a video just the other day. This is a thumbnail of it. And I'd encourage you, if you're interested in Palantir, take a look at it because it's a deep dive into exactly what does Palantir do and where does it fit into what I'm going to choose to call the Digital Revolution 3.0. What I kind of surmise, if you'll bear with me, is that under Digital Revolution 1.0, Google has given us all the information we want to know in exchange for all the information they want to know about us. And then they've turned around and sold all the information around us to help advertisers to put products in front of us that they think we want to buy. That's Google. As a result of this whole thought process, I've gone back to start reading. Yes, the book is properly held. The Life After Google. This is a book that was written in 2018, and as I remember, George Gilder, who's a guy about my age, is basically predicting that Google will disappear. It will be replaced. I don't know exactly if Palantir is what is going to replace Google, but to summarize what I think Palantir is Google gives us everything we want to know for free. Palantir will give us all the data, all the information that we need to know at a price. Okay? Google gives it to us for free in order to sell our advertising. But then through the data gathering process, Palantir will give us everything we need to know for a price. And what do I mean by that? Well, certainly Google has given us access to search information. I mean, anymore, I have no need for a library. I have no need for an Encyclopedia Britannica. I just ask my phone, Google, what is, and Google answers. And as a result, Google then sells my data to advertisers. But what's gotten me excited, I'm very interested in the health science, and health science is the information I need to know, and I'm willing to pay a price. Cybersecurity is something that a corporation needs to know and will pay a price. Battery management is something that you'll need to know and you're willing to pay a price. The movement of cars autonomously down a highway is going to produce information that you need to know that you will have to pay a price for. So that's the Digital Revolution 3.0 as I see it. So with that in mind, I then want to look at Palantir, as I did in that previous video, and come to a conclusion as to where they're going to fit. What my next question became was, why did Palantir's price go up as it did, and as I bought into it when I saw Alex Karp and Peter Thiel and said, those are the kind of guys I want to invest in, and it took it up somewhere around $28 a share, and now it's down to somewhere around $8 a share. I had 700 shares. I added to those 700 another 700. But I wanted to know why the price came down, and do I have the confidence that it will go up? And that's what this video is. That's my need to know that I thus want to share with you. This isn't financial advice. This is financial education, so that if in fact sometime in the future you want to know why did that price drop so much? Is that justified, or is that something I want to hold? This is financial education, not financial advice.
Best of Us Investors presents Carrie Griegmeyer.
Palantir right now has a market cap of $16.5 billion. I found that information on Seeking Alpha. So let's go to Seeking Alpha and see what I found there. Okay, this is my Seeking Alpha page. I actually don't see how anybody can function in trading if they don't belong to Seeking Alpha. As you can see, it tells me here it's got a 1-year drop in price of about 60%. I can click there and I get a year to date of down about 54%. What it's going to do is give me a summation of what the market thinks of Palantir at this time. I like to read the articles and get other people's opinions, but what I came here for was basically to look at their revenue streams. And as you can see, their revenue is growing dramatically, and they're projecting future revenue. Where they run into some problems is their earnings estimates and then their actual predictions of earnings. And it's because, as I'll explain to you in a little bit later, and Alex will explain to you, Alex's mindset on how to build a business is based on an entrepreneur's building a business. It isn't based on how an analyst wants to see the numbers presented, because an analyst has to compare apples to apples and oranges to oranges. And if you have a lemon in there, or let's don't call it a lemon, let's call it a pineapple, and nobody's ever seen a pineapple, they don't know how to analyze it. And Alex will explain that to you in a second, exactly why. Once again, you need to be a part, and I've negotiated you a discount on Seeking Alpha. I believe, through my research, is that Palantir has the potential to raise its market cap to $1.645 trillion. That's an easy 100-fold increase. So I want to buy 2,000 shares so that I believe my holdings will be worth somewhere around 1.6 million when they hit this price of $800 per share. So I look at it and say, okay, that's where I think it's going. That's where I want to measure it and say that's my objective to it. But still, I got to answer the question, why did it drop so much in price? Why did the analysts come out and just butcher this thing? And what I learned, and I learned it from Alex in this interview or piece of tape that I'm going to show you. And I got to apologize that Alex doesn't speak in as simple a terms as you and I probably do. What he's basically saying in this piece I'm going to show you is we built this company to serve the government. And we built it on a basis that we wanted the best possible engineers that we could get and make sure they didn't leave. I'm building a company. I always look not so much for employees, but for partners. And that's what Alex built his company on. He wanted the best talent, and the best way you can get talent is give them ownership of the company. So what he has structured his payroll or his compensation program around was people achieving ownership in the company. So then when the analysts see him paying that way, they see that as dilution of shares. I, as an entrepreneur, see that as a smart way to build a company, because rather than take cash out of the cash register to pay an employee, you take a slip of paper and you say, here's a share of this company that we both believe is going to grow enormous in size, and that's worth a lot more than $300. Okay? That's how Alex thought. That's how he built this company. That's his mindset. And so when the analysts come and say, hey, you've got all this money going out in stock to your employees, and you're diluting the shares of your shareholders in doing that, and that isn't good business practices. Well, it isn't from their analysis point of view, and it is or isn't from a stockholder's point of view. I kind of like it because, as Alex says in this thing, we got all the cash we need. Watch this piece here.
There's stock-based comp and there's dilution. The dilution thing, that's a red herring. We're not issuing a lot of new shares. I think it's like in the $9 million range. And so it would be a little coy of me to say that's like no issue, move on. The thing to understand about Palantir, and then I want to just hit this, is like it's actually not the result of the DPO. It's the result of the fact that we were completely focused on building product. We had no earthly idea we were going to DPO till like right before we did it. And so most companies are, I mean, quite frankly, built so that when analysts look at it, the primary customer of most software companies is not the client, it's the software analyst. So it's like we obviously, our primary client are our clients, which doesn't mean, now we're thinking about how do we expose the data in a way that, people on the outside like you and professional analysts and others can look at the data and get a better sense of what's tracking and what's not tracking. But the primary source of a lot of these questions really comes down to, look, we built the company to support the U.S. warfighter primarily, and then dual use it for the glory of humanity, particularly humanity in the West. That was our idea. And because our primary client was not what someone at a hedge fund would think, we didn't actually think of these things from inception. And so now there's a process of normalization. You're going to see that in going forward on these calls. It's like, how do you normalize? How do you provide data that people can look at? How do you provide data that people can understand, that they're used to seeing, while simultaneously staying true to what our mission is? It's like our primary clients are the people we're serving. We're in full line with them.
Okay, then I thought it was kind of, I guess, encouraging that he almost admits, look, I don't know this part of the business, but I am told we'll get this rectified to satisfy you in the future. And he's speaking to the analysts directly. Watch this.
How do you actually run the company so it's profitable someday on a GAAP basis, not stripping out comp? And that is also within eyesight. And those are goals for Palantir, because same reason we have no debt, same reason we have $2.3 billion on our balance sheet. This is a company built for bad times. Bad times mean strong finances internally, and that means at some point you have to be GAAP profitable. You can't be GAAP profitable if you're diluting people, or correctly, your stock-based comp is totally is not in conformity with other companies. So you're seeing a normalization. This will change. It will change in the relatively near future. It'll be linked to other things that we believe are important for Palantir, like having a company that thrives in bad times. And bad times are very good for Palantir because we build products that are robust, that are built for danger, and then the finances internally are actually built for bad times. And bad times means you have free cash flow. The free cash flow turns into GAAP profit. That means the stock-based comp has to be one that's aligned with our investors. Also, because that's basically, it's part of a little bit longer philosophical narrative, but like if software is the only moat, then value and growth shares have to be evaluated in terms of their value. Value only exists if you can actually get a tech moat, call it, maybe it's something besides, and growth only exists if you build a company that is where the technology is strong enough, the business fundamentals are strong enough that the free cash flow actually turns into GAAP profitability, and that's linked to stock-based comp. So this is a priority both because you care, but also, quite frankly, because it is the health of our company, which we care a lot about.
So Alex has woken up to the fact that he has to run his company under the scrutiny of a bunch of analysts that analyze every company basically under the same model, based on numbers and numbers only. And he said, okay, if I'm going to play in your ballpark, which I agreed to do when I took the company public, I will change the structure of our company to feed your needs. Shame on you, Alex, but I understand. And I appreciate it because that will help me get the price of my shares up to $800 a share sometime in the future. So I'm comfortable that at some point in the future, and I'm not going to put a date on it, I would say sometime in my lifetime, that Alex's or Palantir's market cap will match the current market cap of Google at $1.6 trillion. And I'm comfortable with that because I think that there is going to be a higher price on the knowledge that I need to know than the knowledge that I want to know. In other words, I think it's going to become more important to me and to you to know how do I cure this disease that I have in my body, or how do I securely drive my vehicle down the highway while I'm watching a movie, or how do we move airplanes through the sky more rapidly and efficiently. In other words, the information we need to know is going to become more valuable to me and to the rest of the world than the information I want to know. How old is Clint Eastwood? Okay, I want to know that. So I ask my phone, and Google tells me and gives it to me free. And in exchange, Google tells the movie producers that Carrie's interested in Clint Eastwood. That's the exchange there in Google. I believe that the exchange between me and Palantir, or the traffic control people of moving multiple automobiles down the highway at 80 miles an hour, is much more valuable information than how old is Clint Eastwood. Okay? That's what I believe is happening in the future. So that's why I believe that Palantir's price will equal, if not surpass, that, or market cap will equal, if not surpass, that of Google. That's my logic. Now, something else that I want to share with you that it just kind of came to me is the recent path of Palantir's stock price. It matches perfectly that of Amazon. Take a look at this. This is an early chart of Amazon.com. As you can see, it was IPO'd back in June of 1997 at somewhere around, it looks like, $2.40 a share. And it had shot up to about $114 a share. And then from December 1999 to November 2001, it lost 94% of its value. And then we know basically what happened from there. And we now look at a stock that used to sell for about $3,800 a share, and today is on sale for $2,142. This is a daily chart on Palantir. Started out at about, it looks like about $9 a share, $8.81, shot up to $45, and now it's back down to $8.01 a share. That's Palantir. So, is it fair to say this is a repeat performance? This is Digital Revolution 3.0, and this, Palantir, is your next Amazon.com? Okay, that's my analysis, which is all came as a result of a question that Bob from Ireland proposed to me and the other participants in our Friday Zoom call as a part of our Discord, asking the question, should I or shouldn't I buy Palantir stock? At that point, I had 700 shares. Today I have 1,400 shares. And Bob, I'm looking to add another 400 to get me up to 2,000. Now, Palantir is up today about 6%. It's up to about, I think it's $8.50. I suspect that something will happen in the next couple of days and it'll come back down, and I'm going to try to buy some down in the $7 figure range. So that's my take on Palantir. That's my take on the future of search. I'm going to be able, or my doctor or my medical facility will be able to search and find what's wrong with Carrie under these diagnoses that we currently have, and access all the data in the world to help me make a better healthcare decision, to help drivers make a safer movement through traffic. It comes down to Google's giving us data for free that we want to know. Companies like Palantir are going to give us the data that we need to know to make our lives better. That's how I see it. That's why I'm investing the way I am. If this follows your logic and adds to your life, just, give us a like. But more importantly, come share your information with us. Come join our Discord. All you got to do is go to Best of Us Investors or go into the description and you'll find a link there. Okay. I'm high on Palantir. I'm just damn high on the world that is going to be presented to me over the next 5 to 10 years. I really don't care about inflation. I'll get through this.